Hello everyone, welcome to the AdCap Show. So the US and Vietnam announced trade deal on July 2nd, 2025. However, it's not a final trade deal. This agreement could be a game changer, but probably only for the US. Vietnam is on losing side, but they don't have much option. I'll discuss that in a while, but first let's set the stage. The US and Vietnam have been trading partners since the 1990s, but their relationship has skyrocketed over the past 2 decades. Back in 2001, bilateral trade was just $1.5 billion. Fast forward to 2024, and it hit a staggering 149.6, almost $150 billion. That's massive growth. But here's the catch. The US has a huge trade deficit with Vietnam, reaching $123.5 billion last year. That's the third largest trade deficit the US has with any country, behind only China and Mexico. So, why does this matter? Well, this deficit combined with concerns about Vietnam being the hub for Chinese goods, dodging US tariffs, led to this new trade deal. Now, let's talk about what this deal actually includes. So, on July 2nd, 2025, President Trump announced a reciprocal trade agreement framework with Vietnam after a phone call with Vietnam's General Secretary Tu Lam. The deal isn't fully finalized, it's a framework, meaning the nitty gritty details are still being hammered out. But here's what we know so far. Number one, tariffs. The US is slapping a 20% tariffs on all direct imports from Vietnam. Now, this is a big deal because it's double the current 10% minimum tariff rate that Vietnam and most other countries face. Back in April 2025, Trump threatened a whooping 46% tariff on Vietnamese goods to address the trade deficit. That would have been a massive hit to Vietnam's economy, which relies on export to the US for about 30% of its GDP. The 20% tariffs is a compromise, but it's still going to raise the cost of Vietnamese exporters and likely for the US consumer buying things like clothes, shoes, and electronics. This means manufacturing in Vietnam might slow down because demand in the US will go down. Number two, transshipment tariffs. This is where things get spicy. The US is imposing a 40% tariffs on goods transshipped through Vietnam, meaning products mostly from China that are routed through Vietnam to avoid US tariffs. For years, Vietnam has been a hotspot for transshipment. Chinese companies send goods to Vietnam, slap a Made in Vietnam label on them, and ship them to the US to dodge high tariffs on Chinese products. This 40% tariffs is meant to crack down on that practice, but it's tricky. Defining what counts as a transshipped good isn't easy. Many Vietnamese exports contain Chinese components, so figuring out what gets hit with 40% tariffs will be a logistical challenge, and in many cases, it'll increase the cost of product. Number three, zero tariffs for US exports to Vietnam, which is not good for Vietnam's economy. This is a huge win for the US because Vietnam has agreed to let American goods like pork, poultry, beef, corn, wheat, and even big SUVs to enter their market with zero tariffs. This is part of what Trump calls total access to Vietnam's market. It's a big deal for US farmers and manufacturers who have faced barriers in Vietnam before. Plus, Vietnam is reportedly signing an $8 billion deal for 50 Boeing aircrafts and $2.9 billion in agreements for US agricultural products. That's real money going back to American businesses. The problem with 100% market access to Vietnam's market is that American corporations don't really believe in competition. They like establishing monopolies wherever they go. This will hurt Vietnam's domestic producers and will delay building internal capacities and capabilities as competition will increase, and over the period of time, it might even get killed. Number four, rule of origin. The deal aims to set favorable rules of origin to stop transshipment. This means stricter check to ensure goods exported from Vietnam to the US are actually made in Vietnam, not just passing through from China. This is critical because a lot of what Vietnam exports, like electronics and apparels, has Chinese parts. In fact, too much of Chinese parts. Getting this right could reshape supply chains, but it's going to take some serious enforcement, which is very difficult to implement. Finally, Vietnam is promising to tackle non tariff barriers like intellectual property issues to make it easier for US goods to enter their market. This is all about leveling the playing field, which has been a core part of Trump's America First trade policy. So how did this one-sided deal came together? Well, it started with some serious pressure. In April 2025, Trump announced that 46% tariff threat, giving Vietnam and other countries a 90 days window to negotiate before the tariff kicked in on July 9th. Vietnam didn't waste time. Their deputy prime minister, who met with US Trade Representative Jamieson Greer in Washington, and that phone call between Trump and Tu Lam sealed the framework. Vietnam also sweetened the deal with some concessions like approving Starlink's operation in their country and pushing for more US investments, including a $1.5 billion project by the Trump organizations for hotels and golf courses. Now, this has raised some eyebrows about potential conflict of interest. Now, you might think why Vietnam signed such a one-sided deal where it's losing on every front, and the answer to this lies in its long-term economic planning. You see, Vietnam had a simple idea to grow its economy. The plan was to attract as much FDI as possible, especially from Korea, Japan, and China, then assemble and manufacture goods and finally export it to North American and European markets. By doing this, Vietnam had a plan of going up in the value chain in medium to long term by building internal capacities and capabilities. This is typical East Asian model of growth. However, it looks like this model is now becoming obsolete because of deglobalization and the US weaponizing its market. This had put a blockade on export-led economies for whom the American market is very precious. They basically depend on growing by exporting to the US. Vietnam's population is around 100 million, and over the years, Vietnam's economy has only grown. The current GDP per capita is around $4,800 and is heading towards $5,000. Around 40% of population makes less than $10 a day. That means 60% makes $10 and above. This is a remarkable achievement given Vietnam got access to globalization only after 1990s. So Vietnam is a growing market and the US is looking to completely capture and dominate it. Situation gets more problematic because Vietnam's demographics are changing very fast. The TFR is continuously falling and currently stands at 1.91. Most probably, Vietnam has maximum 10 years to build its capacities and capabilities. If not, then stagnation will happen, which will put Vietnam into middle income trap. With the current trade deal, things aren't looking so good for Vietnam. However, there's still possibility for Vietnam to grow at current pace by diverting its exports to other regions like Latin, Africa, and India. Now let's zoom out and talk about why this deal matters geopolitically. Vietnam is in a tough spot. It's a major US trading partner, but it's also heavily tied to China. In April 2025 alone, Vietnam imported 15 billion worth of goods from China. Chinese companies like Shin are setting up shop in Vietnam to get around US tariffs. This deal puts Vietnam in a balancing act. Keep the US happy while not alienating China, its biggest import partner. Now, this is how it should be in an ideal situation where Vietnam deals with both countries on its own terms. But that's not the direction the things are heading towards. The 40% transshipment tariffs could push Chinese firms to move more production to Vietnam, which might boost Vietnam's economy but could also strain its relationship with Beijing. For the US, this deal is about two things: cutting the trade deficit and curbing China's influence in global trade. The Trump administration, including folks like Commerce Secretary Howard Lutnick and Trade Advisor Peter Navarro, has been vocal about Vietnam's role as a colony of China for transshipment. This deal is a shot across the bow, not just at Vietnam, but at other countries relying on similar trade practices. Now let's go to the numbers because they tell a wild story. In 2024, Vietnam's trade hit $149.6 billion. The US exported 13.1 billion worth of goods to Vietnam. That's up 32.9 from 2023. But here's the kicker. The US imported $136.6 billion from Vietnam, a 19% increase from the year before, that is 2023. That leaves trade deficit of $123.5 billion, which is up 18% from 2023. To put that in perspective, back in 2019, the deficit was $56 billion, and it has more than doubled since then. In the first quarter of 2025 alone, the deficit was $39.1 billion. That's why the US is so focused on this issue. So what does the US buy from Vietnam? Well, a ton of stuff like machineries, appliances, clothing, shoes, computers, electronics, apparels, accessories, and furniture. On a flip side, the US sends Vietnam agricultural products like pork, poultry, beef, corn, and wheat, plus aircraft and industrial goods like SUVs. This deal aims to boost those US exports while making Vietnamese imports more expensive through tariffs. Let's talk about what this means for common consumers. That 20% tariffs on Vietnamese goods is going to make things more expensive. Experts estimate a 10% tariff could raise a price of men's sweater by about 8%. At 46%, it could have jumped 35%. With the 20% tariffs, we are looking at a noticeable price hike for clothes, shoes, and electronics at stores like Walmart or Target. On the flip side, zero tariffs in Vietnam could mean more American products on their shelves, which is great for US farmers and companies like Boeing. The markets took notice of this deal. On July 3, 2025, the S&P and Nasdaq hit record high, partly because investors were relieved that US-Vietnam trade tensions didn't escalate to that 46% tariffs. Shares of companies manufacturing in Vietnam, like apparels and electronic firms, saw a modest gain, but the 20% tariffs means they're not out of the woods yet. So what's the big picture? This deal is a big win for the US in many ways and very dangerous for Vietnam's future portfolio. It gets Vietnam to open its market, boost US exports, and take a swing at Chinese transshipment. But it's not perfect. Enforcing those transshipment tariffs is going to be a headache. Plus, Vietnam's economy is so tied to export that a 20% tariff could hurt its growth, which it will, and which might ripple back to the global supply chain. And let's not forget the geopolitical tightrope Vietnam is walking between the US and China. This is a framework, not a deal. The US and Vietnam are still working out the details, and we could see a final agreement in coming weeks. The big question is enforcement. Can the US really crack down on transshipment without disrupting legitimate trade? And will Vietnam follow through on its promises, like those Boeing purchases and zero tariffs? Plus, this deal sets the tone for other countries facing Trump's tariff deadlines. The EU, Japan, and others are watching closely. So, alright folks, that's the full scoop on the US-Vietnam trade deal. What do you think? Will this help balance trade, or Vietnam is heading towards a big economic trouble? Drop your thoughts and comments below, smash that like button, hit subscribe, and ring the bell so that you don't miss our next breakdown. This is the AdCup Show signing off. Peace out.